There's a lot of fear about direct issued government digital currencies, but capital creation has really never been a public sector. It hasn't been a public sector gambit for a really long time. It's really been taken over by the private sector. And the way that works is, the government issues these securities and sells these bonds to private banks who then use those bonds to create dollars. Tether already has onboarded the FBI and the Secret Service, to their blockchain. Meanwhile, they're buying $100 billion worth of government debt. So I think the CBDC thing is really going to be basically essentially a red herring, and we're going to see the private capital creation gambit continue.
Mark Goodwin is a proud Bitcoin investor and the editor-in-chief of Bitcoin magazine, which prides itself on being the oldest source of information on Bitcoin. Earlier this year, Mark and popular investigative journalist Whitney Webb wrote and published an article titled Unmasking Farmington, FTX, Fluent Finance, and the Coming Digital Dollar. For context, Farmington State Bank was one of the smallest rural banks in the United States, caught in the FTX Alameda Research collapse scandal in late 2022. The scandal was so massive for such a rural bank that investigative journalists like Mark and Whitney began to wonder why Alameda Research poured $11.5 million into the bank shortly before its collapse in 2022. At the time, Farmington's total net worth was less than half of Alameda's investments, with just 32 employees and servicing a town with less than 200 residents. In 2010, the town's local paper, the Spokesman Review, described the bank as strictly no frills, not offering credit cards or online banking, just decades of serving as a single-branch community bank in rural Washington. However, this changed in 2020 after the rural bank was acquired by FBH Corporation, which was founded in the same year by John Chalopin, the CEO and chairman of Deltic Bank and Trust in the Bahamas, seemingly just for the purpose of purchasing the rural bank. With the purchase came a complete rebranding for Farmington. It acquired an online-only sister bank, Moonstone, and pivoted to deal with cryptocurrency and international payments. According to the Spokesman Review, when pressed for answers about the sudden acquisition, a Federal Reserve spokesperson said he could not comment on the process that federal regulators undertook to approve Chalopin's purchase of the charter of Farmington State Bank in 2020. In their piece, Whitney and Mark reveal that Chalopin's Deltec has deep ties with Tether, which offers USDT stablecoins, and a relatively unknown company called Fluent Finance, which has been developing significant government partnerships in the Middle East and looking to become a central part of the coming central bank digital currency movement, sweeping across the globe. In a recent video published on the Big Picture with James Patrick YouTube channel, Mark reveals an even bigger scandal that would have significant consequences for all American citizens. As we bring you clips from the video, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Let's dive right in.
There's a lot of fear about direct issued government digital currencies. The fears being that it increases the ability for surveillance and the ability for blacklisting, and this programmability, of digital money can be used against citizens from big bad evil government, which of course is true, but capital creation has really never been a public sector. It hasn't been a public sector gambit for a really long time. It's really been taken over by the private sector. And the way that works is, the government issues these securities and sells these bonds to private banks who then use those bonds to create dollars. They use the collateral from the debt that they buy from the government to actually create the dollars in your bank account. The digital dollar has been around for a very long time. It's been digitized for decades. And so we have this, big fear that's been basically, simulated of digital, direct issued digital currency from the government. And we're all very fearful of that. But really what's happening, what we're actually seeing, much more so than CBDCs actually being issued, is we're seeing the private sector enter the market and continue this game of private capital creation by buying these bonds and creating these, debt tokens, basically. And that's what stablecoins are. They're tokenized debt with a dollar denomination. And we're going to continue to see that. The private sector actually is very helpful for the government. We can look at COVID as this kind of model for what they're going to do, where they used private companies to restrict certain voices, restrict certain ideas, blacklist certain discourse from the discussion about COVID. Whereas if these were actually public squares that the government needed to uphold for citizens, they would not really be able to restrict people as much. But they can go ahead and force these sort of private companies that are heavily government contracted, like a Google or a Twitter, to suppress voices. They're going to do the same thing with the banking industry, and they're going to be private basically in name only, have very heavy connections with these private, fintech companies that are issuing stablecoins. And we've already seen that. Tether already has onboarded the FBI and the Secret Service, to their blockchain. Meanwhile, they're buying $100 billion worth of government debt. And one of the fastest growing sectors of purchasing government debt are these fintech companies. So I think the CBDC thing is really going to be basically essentially a red herring. And we're going to see the private capital creation gambit continue. There was $100 billion worth of treasuries purchased by Tether and its subsidiaries, and the people that own them, like Cantor Fitzgerald, Deltec, these banking partners. They're one of the fastest growing markets for government debt purchasing. They would be in the top 20 of a sovereign nation buying debt. They're at about 1/10 of our biggest creditor, which is China and Japan. They're just a little bit above $1 trillion. They're now at $100 billion. So just one company has 1/10 of the debt that the U.S. has ever sold to China and Japan. They have to sell this debt to somebody, right? We're now at this kind of unique place where the debt service, just to service our debt, not to pay it off, but just the service of the interest on the debt, is now outpacing in a year the growth of the GDP. So we're essentially, if you look at the U.S. as a corporation, and in many ways it is, we're a zombie corporation. You would never invest in us, never. Our debt is outpacing our growth. And so they have to find somewhere to sell this debt to. It's been Japan and China and, the Bahamas basically, for the history of the U.S. selling debt. And now all of a sudden, out of nowhere, we're seeing these private entity stablecoin providers just Pac-Manning up government debt and just eating it up. And that's not going to stop. We've heard from, Walter Hessert, who's the head of strategy at Paxos, which is very integrated with PayPal. They run their PayPal stablecoin. And he's specifically said that we're going to see, trillions of dollars of stablecoins, highly regulated stablecoins issued. The only way that happens is if trillions of dollars of government debt are purchased.
Mark and Whitney's summation is that as a result of the backlash against CBDCs in the US, the Federal Reserve will try to sway the public with the promise that the digital dollar will be solely handled by private entities, free from the prying eyes of the government. Their article was released in January, and Fed Chair Jerome Powell said something similar while testifying before Congress in March. When asked if the central bank had any intentions of issuing a CBDC, Powell said, "We're nowhere near recommending, or let alone adopting, a central bank digital currency in any form. If that were a government account, that the government would see all your transactions, that's just something we would not stand for, or do, or propose here in the United States. If we were ever to do something like this, we would do this through the banking system." Herein lies Mark and Whitney's fears. The central bank, which is at least partly answerable to US citizens, will not be in charge, but there is a possibility that the dreaded banking cabal will be out in charge of people's information and in control of what they can and cannot do with their money. This is coupled with fears about digital IDs, a global carbon credit system, and other not-so-suitable plans of global elites. Let's get back to the discussion as Mark speaks further about stablecoins, their mostly questionable issuers, and the US and global economies.
I think stablecoins are the ultimate technology for spreading US government debt around the world. And they're using this really clever and diabolical framing of, hey, no, we're, these countries like Argentina, they've been wrecked by inflation, and their really bad currency is the issue. It's their bad currency, their fiat, bad governance, monetary policy. So we're doing a huge favor by giving them access to U.S. dollar denominated essentially bank accounts. We're banking the unbanked. But no, really what you're doing is you're charging the global south a fee to use your bank account. And in a lot of these cases, these are like offshore Bahamian bank accounts. Some of them are, they're now getting more regulated within the purview of the DOJ and the SEC and the CFTC and, the Fed Treasury. But historically, these have been basically offshore banks. And we're going to see high velocity of dollar usage, high volume of dollar usage. And we're going to see more and more countries relying on the dollar. And we're seeing that, in South America, as you stated, and in the global South, and on the whole, and in parts of Asia, huge upticks of stablecoin usage, of dollar usage. And it's being framed as this like humanitarian effort, wherein really it's debt serfdom. There is no difference between the programmability of a private entity stablecoin versus a direct issued government one. In fact, there's actually probably more ability for a private entity stablecoin to do, there's probably more opportunity for a private entity stablecoin to do more shenanigans with the programmability of their dollar denominated token rather than the government. Again, they can hide behind, the restriction of customer access being in the private sector. They retain a lot more ability to do that than they would if they were openly in the public sector. We've seen this happen before. We've seen multiple times in the last few years, banks restrict people for saying certain things online, or being, around the Capitol building on a certain day, or, protesting mandates, say in North America and in Canada, and taking away banker restrictions or rights to your bank account. So we've seen the private sector, the private banking sector, already flex these restrictions for being private entities. It will only be more accessible for them with programmability. They could take your money away, blacklist your money. We've seen this already with the FBI and the Secret Service coming on to Tether. They've blacklisted dozens of addresses at the behest of the regulatory arm of the United States. That is a power that will not be given up. It's too important as a tool. And so as they, with one hand, are pushing this as this financial tool to give sovereignty to the global South, at the same time they're onboarding literally U.S. intelligence and law enforcement onto that very system that is a very transparent and surveillable, programmable system. So you can kind of see the dialectic there, the rhetoric versus the action.
The rhetoric is that the US government will not be anywhere near CBDCs to protect citizens. But the reality is that this has always been the plan. We've been hearing more and more about this global private-public partnership for years. And their plan is to create a new world order where the lines are really blurred, and the ultra-rich and powerful finally reveal their endgame. Whitney and Mark warn that Fluent Finance's US Plus stablecoin will someday become the de facto digital currency of the United States. It won't be controlled by Jerome Powell or any US government agency, but by big commercial banks like JP Morgan. In her words, the US is going to get the same digital currency garbage that's being issued in other countries, but it wouldn't be controlled by the Fed. It will be controlled by banking industry custodians like Jamie Dimon. Which do you prefer, a CBDC controlled by the Federal Reserve, or one controlled by JP Morgan, Larry Fink, and other Silicon Valley executives, or none at all? Please share your thoughts in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.